Hello everyone, this is Mingjong. Welcome to today's market analysis for the S&P 500 E-minis futures for the session of 8th of June. In this video, I'm going to show you the market recap on the last Friday's session, plus one trade review in the M3 timeframe, which I will cover the entry, exits, and the rationale behind, based on a test and a reversal setup that's during the London session last Friday. Going forward, I will cover the bias, the key levels to pay attention to, and also the potential setup for the session later. So let's just get started here. As we can see on this daily chart for the S&P 500 E-minis futures, last Friday was super bullish, and we can see it actually reflected in the price spread. So last Friday, I think that's after the non-farm payroll data release, and we have seen a strong rally up, and there is a much retracement, or if there was, it was very shallow. And subsequently, it actually rallied up and actually tested the resistance level 3210, which I mentioned it in my previous video as the first target, the immediate target, and also the resistance level that we need to pay attention to. As you can see that it actually just touched this level 3210 and immediately has a reaction back. But the close was still quite bullish. And another thing that stands out to me was the volume on Friday. The volume was very high, and that suggests that there was presence of a supply, and that together with the climatic run up, I think on the daily chart you probably can't really see the effect, but on the H1 chart, definitely this is a climatic run up. That's together with the increasing of the volume, and definitely is a climax there. But it's kind of like a localized climax. I can see that if it's from this reaccumulation range, spring, sign of strength, backing up, and we have a push up, the marking up, and definitely this is kind of the climatic run. And I think we need to watch out for this kind of the action, especially is hitting into the resistance level at 3210. And what else? I think on the H1 chart, if you recall on my last Friday's videos, I did talk about if that were a spring, then we have a sign of strong rally, which we did have. And what I would like to see is actually a backing up action, which it did happen and actually tested the support level, the resistance turn support level that I mentioned about around 3135 or 3130. And I will just dive into the M3 time frame to cover my trade review there. As you can see that just right after the test of the resistance turn support level, it actually completed the backup action, and that's followed by impressive markup that's in conjunction with the non-farm payroll. Let me get to the M3 time frame. So this trade was actually initiated during the London session, just before the non-farm payroll. I didn't really keep that position until just right through during the non-farm payroll, and also after the during the regular trading hours. I just close it right before the non-farm payroll. So you can see here, I think I just zoom in a bit. You can see this a bit clearer. Okay, so this is just before the non-farm payroll is around 6:30 my time. So you can see that we have a reaction that's during the London session. Subsequently, I think it just tested this resistance turn support level, and you can see that we have a test here, and followed by an attempt to rally up, but we still see some rejection and some selling happen, which you can reflect it in the volume here. We have seen a spike of the volume, so that's not an entry. And we have seen another test here, which is a test of this low here, but that's with a very low volume. And subsequently, we have seen a reversal bar here with an increasing volume. So the volume is good, and also the spread is quite nice, and it actually just formed as a reversal bar. So this is where I initiated my long entry. I thought I could just write it up and just to somewhere around the supply zone 3143 as my first target. But unfortunately, you can see that I actually close it somewhere around 8 o'clock, 8:10 my time. The non-farm payroll is around 8:30 my time, so this is just about 20 minutes before the non-farm payroll, which I intend to close my position. If I want, then I will probably just leave half of my position. But in this case, I just exited all my positions because you can see that the rally is kind of like grinding up. Doesn't really have much momentum. And on this bar here, you can see that the volume actually picked up, but followed by another volume increase, but we see that the price spread actually decreased. So at that point, I actually suspect that there was demand there, and the subsequent bar here actually confirmed my thinking here, because there was actually a demand bar. But unfortunately, next bar just showed that it's a failure. So I just exited at this big bearish bar here, because it's actually a failure, and it's just a kind of like a so-so trade, because the reward to risk ratio was just around 0.7, 0.8, not too great. But that's the way it is, because I just can't hold it to the non-farm payroll, especially it's very volatile, and usually if you hold it and with a very tight stop, it will easily get stopped out. But in this case, on a high side, then I think everyone will be regret if they didn't really hold on the position, because you can actually write it up, and that's very impressive. It's a ton of the R here. Well, but unfortunately, it just didn't happen. That's the real life trading. All right, so this is the trade review. I only had one trade just in the London session, because during the NFP, the non-farm payroll, I just didn't enter during the pullback. I think it's still very volatile, and also it had just rally up so much. So I just give it a miss. And during the US session, there's the opening here. You can see that we have a continuation of the momentum, although it kind of like forming into a trading range here. Start from here. It just go into a trading range, and near 11 o'clock, it just started to break out and trend higher. And actually just tested this resistance level at 3210. And subsequently, you can see that there was a reaction, pullback happened. So definitely, I think the S&P 500 just respected this level so far. 3210 is still a good level, but I think we should see higher targets, which I will show you later on. All right, so let's just get to the current moment. What's happening now? Okay, let me get to the daily time frame, and we can see that the first target at around 3210 has been achieved on last Friday. And if you look at my latest chart here, I just extend this middle line, the up channel. You can see that I have extended the middle line towards near 3400 here. So it's still the same chart, same channel. It's just that I extended the line here. And also I added one more line here, so it actually like become another channel here. So this is the middle line, and you can see that it actually grind up very well with the price action. So if we think this as a up channel, then I think we can still have some room to go up until we hit the overbought area here, which is in line with the resistance level at 3300 or 3310, somewhere around there. And we can see that there was actually a gap here. So there's actually a gap resistance there. So I think on a larger time frame, we still have a bit of room to go up, maybe to hit this overbought level until we see maybe some pullback, and eventually it could just go to all-time high. So this is a possible scenario as well. Currently, if you follow my blog on a Medium, I did had a newest post on Sunday. I talk about potential climatic run-up to end this rally, or another possible scenario is to have an exhaustion of the momentum to end this rally, because I just suspected this could be the last leg up, based on some kind of the volume analysis here, because I thought there are a large fund to accumulate the positions on the way down during this sell-off. And we have latecomers started to join in the party in the mid of May. As you can see, there's the increase of the volume here. So these are the latecomers to join the party. And if we look at the sentiments, which I blog about on the Medium, and I talk about the CNN Fear and Greed Index, I think is somewhere around 60 or 70. It's not yet extreme, but it's definitely in the greed area, no longer in the fear zone. And also I talk about the AAII bearish, bullish indicators. So I think the bear, some of the bears just gave up their positions and started to turn positive and started to buy. So I think this could be a sign that we need to watch, especially to pay attention to the price action. So whether it will just end this run up like with a climatic run, or you can just have some kind of the exhaustion movement, and eventually just losing all kind of the momentum and demand, and eventually to start a sell off, or at least a meaningful correction, which I think everyone is still waiting or anticipated. And that could be in line with the second wave of the coronavirus, where the worldwide economics reopen just in June or in July. So I think that could be one of the scenario as well. Just need to be aware. All right, so let me get to H1. For the buyers for day trading, I think last Friday was a super bullish day. Usually we see the climatic run up followed by the spike of the volume and also hitting the resistance. I think it's quite normal to see the pullback or a test to resolve the supply area here. So one of the scenario that I can anticipate at this moment is to have a test at a deeper level, because so far you can see that we have a test of the upside and 3210, and we see that it just have a little bit of the minor upthrust and then followed by a reaction here, and subsequently it just still trading within this trading range. So we have a small trading range here from 3180 to 3210. But if this level cannot hold the 3180, I think the next level that we can anticipate is somewhere around 3130. I think this is the same level as I mentioned it on Friday, so it's somewhere around there. But another thing that I am watching closely is actually this 2 bar here. So I expect a test of this 2 bar. So in order to resolve this climatic run with a spike of the volume, I think a test of these 2 bars here from 3140 to around 3170 is not uncommon. So it's quite normal. And what else? Yep, I think that's for the bias. So in terms of the day trading, I'm quite neutral because even we have a pullback today and it's just a very normal pullback. I think I'm still looking for opportunity to long if it just bounce up around 3140, somewhere around there. So the potential trade scenario or the potential trading chance that I'm anticipating is actually around 3135, 3130. So look for a bounce up around there. If it is very strong, didn't really break down, then definitely I think it will just continue up to find the overbought level around 3300. So this is possible because so far I think it's still bouncing up from within the range 3180 to 3210. So if it just a breakdown, then I think it's possible to short as well. So these are quite a few scenarios that I can just anticipate after the climatic run up on a Friday session. So I talk about the bias for day trading, and I think for swing definitely is up. So far, there isn't anything unusual except from the huge supply spike on a Friday. But I think overall for swing, I think we should be able to hit the overbought level around 3300, which is in line with the resistance, the gapping resistance area here. So if you zoom out and have a daily view, I think this is quite a nice channel up. And for the potential trade scenario, I do talk about potential long entry around 3135 or potential short entry if it break down to the localized supporting area. So I think that's pretty much it. So yeah, hope you enjoy and get something out from this video. If you like it, just click like and also hover to my name or picture to follow me. Do remember to subscribe to my channel so that you get instant notification for my future videos. As usual, if you have any kind of the ideas, comments, suggestions, or stocks you want to share with me, feel free to comment it below. I will definitely reply to you. All right, thanks for watching and I will talk to you soon.